Everyone, in today's session, we're going to discuss what a Forex trading strategy is and look at manual and automated strategies. A Forex trading strategy is a method that Forex traders use to help them decide whether to buy or sell a currency pair at any given time. This involves the use of specific trading techniques with the aim of generating profits from the purchase and sale of different currencies. There are many trading strategies in existence, and they can take the form of manual or automated trading signals. Modern trading strategies exist in the form of technical or fundamental analysis, or can be based on news events. Manual strategies involve a trader looking for trading signals themselves via manually searching on a computer. Automated strategies are where an algorithm developed by traders locates these signals and executes them automatically without being aided by human input. An effective trading strategy is one that enables a trader to properly analyze the market and execute trades with confidence using sound risk management techniques. When considering which trading strategy to go with, it is worth taking the time to analyze the risk-reward ratio. Also, figure out the amount of time investment is needed for each trading strategy and select accordingly. Ultimately, each strategy will be suited to different traders. So it really does depend on your personal circumstances, how open or averse you are to risk, and the amount of time you dedicate to trading. The best piece of advice is to match your trading personality with the appropriate strategy, as this will help to set a solid foundation on which to build your trading activity. Thank you so much for watching us today, guys.
Everyone, in today's video we're going to look at expert advisors. Expert advisors are computer programs that run on the MT4 trading platform. By using algorithms, EAs are able to monitor and trade financial markets. Basically, EAs are used to automate trading and find opportunities. You can program the software to initiate and execute trades for you by using the parameters you set. For example, you can use an EA to monitor a few key markets. The expert advisor will alert you when it finds a potential opportunity, and you can program it to carry out trades for you and open multiple positions every day. However, there are some benefits and disadvantages that you should be aware of. As trading is automated, an expert advisor removes the emotional factor from your trading. This means that your fear of loss or greed for more profit will not affect your trades. EAs can reduce stress levels because it takes away the anxiety of trading. Therefore, you can set your trades for the day and do other tasks instead. An EA can run on any market that you can trade with MT4, taking lots of information into consideration, such as price movements and news announcements. Our brains are not fast enough to match the speed of an EA. One disadvantage of expert advisor is they cannot respond to real-time news. They basically ignore factors that cannot be programmed into them. If you are at your computer monitoring the news, you can avoid making a trading mistake after a news release, but the EA will keep trading if it's set to do so. Even though the EA can deal with more variables at once than humans can, it can only act in the way it has been programmed to. There may also be times when you need to interrupt the EA to avoid a big trading error or take an opportunity. Whether you use a third-party EA or create your own, it's important to backtest it over various timeframes in a demo account before using it on live markets. A demo account does not risk real money and lets you see how the expert advisor performs for you. You may find that it works well for you on some currency pairs, but not on other pairs. Simply do your research before committing to using an expert advisor. There are good EAs out there, and some traders achieve year-over-year gains using an EA that trades automatically. Thank you for watching.
Alright, guys. Okay, let's give it a moment for the others to join first before we begin. Okay, let's give it a minute or so. By the way, welcome to another IronFX webinar series. So today will be about the Wyckoff strategy. So today is very, very technical. So if you guys are beginner traders, I suggest you guys to just listen. Because practicing the Wyckoff strategy is very, very complicated, but it can yield very, very good results if you practice, over a long period of time. It actually took me 1 entire year to understand Wyckoff and learn how to implement it into my charting and into my trading. So it's a long process there. Okay. Let me just check it out. All right. Okay. Let me turn on the chat so you guys can chat there. Can you guys see my message? Can you guys hear me? Mic test and screen test. If you guys can hear me, just let me know in the chat. All right, nice. Thank you. Promise Gritima. Hey, thank you, Lawa, Rasak. Thank you, Jesse, Banushak. All right, Ogenero. God bless. All right. Okay. So by the way, where are you guys from and how are your new year? Have you guys entered any trades so far this week? Any trades, just send it in, Okay, I've actually started my first trade yesterday. Already entered my first trade of 2023 and it actually hit my take profit. So I'm actually quite happy on that. So we also have the NFP this Friday. So do take care if you are trading. All right, you're trading CAT JPY. All right, nice. If you don't mind, you can actually screenshot your chart and you can send it to chat. We can learn from you, I can open your chart live and everyone can learn together and I can give my own opinions. All right, Ezzy Collins, thank you. Okay, let's start off. Oh, Lagos, Nigeria. Nice. Wow, that's very, very far away. I'm from Asia, Singapore. So yeah, now it's about to be my dinner time. It's already 6 p.m. Oh, Botswana, where's that? Let me check Google Maps. Botswana. All right. Oh, that is in Southern Africa, Ghana. Mambulanga. Oh, nice. Australia, Switzerland, Togo. Wow, many of you guys are from South Africa, parts of South Africa. Oh, even West Africa. Nice. All right. Okay, let us begin. Okay, just a very, very quick disclaimer. I got to read it, so do bear with me. Okay, this material is just the personal opinion of the author, which is myself, and the client's investment objective and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained here. So redistribution of the material is strictly prohibited. So do take note that this session is audio recorded and may be published in various media, in various form. Right now, if I'm not wrong, it's streaming on LinkedIn also. So if you guys are there on LinkedIn, just do say hi. Okay, so my name is Chen Yongqing. I'm sure you guys have seen me many times before. If you guys have joined, you have seen me quite a few times. I'm trading using smart money concepts, the Wyckoff concepts, and the inner circle trader concept. All right, Lawa, Rasak, I will view your chart in a bit. I just saw it that you sent to everyone. So I'm actually the trade analyst for Everest Fortune Group. So our company, we are the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So right now we have a special collaboration with you guys, with IronFX, to bring you guys the good stuff, teaching you guys better ways to trade, hopefully to improve your guys' trading. Every day is a new learning day. So even if you have a good trading strategy already, put it aside for this session, for this 1 hour session, put all your trading strategy aside. Just, open yourself up to hear about this Wyckoff trading strategy. So we have a few topics to cover today. What is the Wyckoff method? Have you guys heard about the Wyckoff method? Have you guys even used the Wyckoff method? Have you guys researched about it before you guys join this webinar? Just let me know in the chat if you guys have heard about it. And we'll be trying to understand the Wyckoff method, how to use it, and how to improve on the Wyckoff method, and how to use it in trading. That's the most important thing that we want to get into by the end of this webinar. So I do not, just let you guys know, I do not expect you guys to fully understand this by the end of this 1 hour session, because it's very, very complicated. I'm not going to lie, it's very, very complicated. Most people that I've tried very, very hard to explain to, they don't really understand it. They don't know what are the terms. There are so many terms to Wyckoff and how you draw it on the chart. Oh, nice. You have heard about it and you are currently learning smart money concepts. Well, great. My main trading method is smart money concepts with a combination of Wyckoff. So it really, really helps a lot with my trading. So what is the Wyckoff method? So Wyckoff method consists of accumulation. Accumulation is when prices accumulate in a small little area before it shoots up. So this area is the accumulation. I'm sure you guys look at the charts every day, Monday to Friday. You guys confirm see it all the time. Accumulation. What is distribution? Prices consolidate and it all of a sudden go down. So this is distribution. So what is reaccumulation? Reaccumulation is when it looks like this area. Prices go up already, reaccumulates and continues moving higher. So this is reaccumulation, this is accumulation, and this is distribution. So what is redistribution? Redistribution is when price distributes, goes down, redistributes, and go down. So this area is the redistribution. So have you guys, I just want to know whether have you guys learned about the Elliott wave? Have you guys heard about Elliott wave? Because Elliott wave, you follow a fixed schematic, a fixed way of trading. So for Elliott wave, we have wave 1, wave 2, wave 3, wave 4, and wave 5. So we have a certain rules to follow, like the wave 1 to 2, it must be 61.8%. Well, for Wyckoff, we have many, many schematics. Accumulation, distribution, redistribution, and reaccumulation. You can actually draw it out on the chart and you can know where to enter, where to buy or where to sell. So this guy is called Richard Wyckoff. That's where the name Wyckoff came from. So Richard Wyckoff was a very, very good trader. He started off with $100 in 1910, 1900s. Back then, $100 and even $1,000 is a lot of money. You're like a millionaire if you had that kind of money back then. So Richard Wyckoff actually founded a stock trading school. He actually wrote a few books about trading, the Wyckoff method. And right now, this current day, the 21st century, the Wyckoff method that all of us are using are adapted from him and has been improved on, by his students back then. So it's brought forward, things has changed here and there all the way. It's already 100 years. He has already passed away. Okay, move on. Who is he? He's one of the 5 titans of technical analysis. He's one of the best traders back then. He even created his own method of trading. He started looking at the stock market at the age of 10 years old. He already looking at 10 years old. What are we doing at 10 years old? We are playing. We are still studying, but this guy is already looking at the stock market. He was very, very interested in trading. Very, very interested to know why price moves this way or this way. So he studied and checked the charts. He's like the modern day, inner circle trader, ICT. So he's something like that back then. So he's one of the 5 titans along with Dow, Gunchart, Elliott Wave, and Merrill. So he wrote and edited the magazine of Wall Street back then. That's not I mentioned already. Founded the Stock Market Institute School. Taught people how to trade. So he's trading capital. Back then, just imagine, I actually read his book. I already borrowed his book. I read about it, how he traded 100 years ago. Imagine you want to trade stocks, you want to trade Forex 100 years ago. How are you going to do that? Right now, it's so easy. You guys open your MetaTrader 4, open your MetaTrader 5 on your phone, on your iPhone, and on your iPad or your laptop. You just open it up, you just click buy or sell. Anytime you want, you can trade Forex or stocks. But how did he trade back then? So this is actually very interesting. I was reading his book. So right now we have something called a delay. Every time when we are trading, the brokers actually recommend us to connect to a high-speed internet connection. So there will be less lag when we are trading, less lag when we enter or exit a trade. Back then, he had to physically sit in a room with a pen and paper, with a pencil and a paper to draw out the chart. So he did not have the luxury of looking at TradingView, MetaTrader, or the charts automatically coming out. He had to draw it by hand. And every time he wanted to enter a trade, he had to pick up his phone, call his broker and tell his broker, oh, I want to buy Dow Jones at, maybe $15. How much? So by the time the broker actually inputs his order, presses his order into the system, how long did it take? It took 2 minutes. It already took 2 minutes by then. So he didn't have the luxury of that waiting time in between, yet he's still a profitable trader. All right. So Wyckoff actually has something he calls the market maker. You guys retail traders like to say, oh, my trade lost. I bought a trade, hit my stop loss because there is a market manipulation. Banks is trying to clear out my stop loss. The moment you say banks are trying to clear out my stop loss or there's a market manipulation going on, you just got to think properly. What lot size are we playing? We are entering the market with most traders are entering 0.01 lot. 0.01 lot is like 10 cents per pip. The banks do not need your 10 cents. The banks do not need your $1. So definitely there is no one is out there to manipulate the market. But Wyckoff, he believes there's a composite man. The composite man is in the market who is controlling where price goes to. It either goes up or goes down. That's what he believes. So just imagine that there is someone controlling the market called the composite man. So Pascal, you ask, how can we get the recording? Well, IronFX should upload this entire recording of this entire webinar onto YouTube soon. So maybe in a few days' time or maybe next week, you can check out the IronFX YouTube channel. So maybe I can send the IronFX YouTube channel to the chat first, so guys do not miss out on it. You let me find it. IronFX. Okay, where is it? All right, I'll just send it to the chat. So you can subscribe to the IronFX YouTube channel. In a few days' time, it might be uploaded there. All right, next, let us continue. So Wyckoff actually has a 5-step approach to the market. So his first approach is to determine the present position, the current position, and the probable and the future trend of the market. So you want to know where you are at and in the market when you actually are looking at the chart. So you want to select stocks or select currencies, select trades in harmony with the trend. That is number 2 approach. For the third approach, he only selects stocks with a cost that equals or exceeds the minimum objective. So fourth approach, he also determines whether the stock, or currency pair that you are looking at is ready to move in the direction that you want. Okay. Give me a moment. All right. So the fifth approach to the Wyckoff cycle is to time your commitment with the stock market index or your forex currency pairs. So next, understanding the Wyckoff method. So normally, if you look at an RSI, relative strength index, I'm sure most of you guys, beginner traders, at the start, when you open TradingView, open MetaTrader 4, there's usually an indicator, the MACD indicator, the RSI indicator. So for the RSI, it will show as oversold. For the RSI, it also shows that it's overbought. So oversold is when traders are looking to buy, and overbought, we are looking to sell. So we have the accumulation area. Prices accumulate before it shoots up. This shooting up area is called the markup area. So it marks up until the overbought area, it starts to distribute. All of a sudden, it distributes and it continues all the way down. This process going down is called the markdown area. Okay. So next, there's three Wyckoff. Later, I'll show you guys accumulation and distribution on the chart and how to draw them out, how to enter everything. I'll show you guys. And if you guys have any questions so far, just let me know in the chat. Just send it in. Please don't wait until the end of the webinar and all of a sudden you guys have many, many questions to ask. Just ask while I'm talking. There's nothing wrong. There's no dumb questions. If you guys don't understand, we are all here to learn. Okay, so there are three Wyckoff laws. You can see it from the screen. The law of supply and demand determines the price direction. So if there's enough demand, price moves on to a certain direction. To demand, the law of cause and effort. What causes price to move in that certain direction? The law of effort. So you guys do not have to memorize this. This is just an introduction to Wyckoff and what is it about. So Promise Guitima asked, do I use multi-time frame analysis with this strategy? So well, definitely. So prices work in a very, very fractal manner. So maybe on the daily chart, we are looking at an overall downtrend. But on the 4-hour chart, overall downtrend. But on the 1-hour chart, it's going on in a uptrend. So prices work in a very, very fractal manner. You guys got to, juggle around, do top-down analysis before you use any trading strategy. Every single trading strategy has to be multi-time frame. So let me show you guys the accumulation and distribution schematic. So please screenshot this down before we continue. Please screenshot this down before we continue. All right. Okay, give me a moment. In color. Highlighter. Please screenshot this down before we continue. Okay, once you guys have screenshotted it down, I'll let you guys know. I'll let you guys already screenshot. I'll move on to the live chart. How to draw the accumulation schematic on using Wyckoff. Okay, give me a moment. All right. I'll just move on to euro dollar. Let me get the currency pair out. Okay. Okay, make sure you guys can see my chart clearly before I continue, before I start. All right. So right here, how do we draw an accumulation schematic? Just now I already show you guys, ask you guys to screenshot it down. Make sure you guys have screenshotted it down. So in this specific scenario, we saw that this is on the 1 minute chart, how prices all of a sudden it accumulates and it shoots up in a markup phase before it distributes and hits back down. How do we spot it? So there's a specific schematic that we have to follow. So right here, we have the selling climax. So really, you guys just look at your screenshot that I've sent in already. Selling climax. Next, we have to follow the schematic automatic reaction. Next, we have the secondary test. In our trading secondary test, I'll just write out all the abbreviations in a bit. Secondary test B. Next, we have the spring. After the spring, we have the test. That's you do not enter on the test. Well, you enter on the last points of supply, the LPS. So let me write down what does all this mean. Abbreviations. SC means selling, climax, AR. Please write it down while you guys are watching. AR means automatic reaction. ST means secondary test. STB means secondary test B. Spring just means spring, test means test. LPS means last points of supply. All right. So this is for Wyckoff accumulation schematic. So it's something like Elliott wave. If you guys have used Elliott wave, you have to follow a very fixed schematic, a very fixed way of entering a trade. So a selling climax, you can actually, price moves down, you have to draw it out all the time. Selling climax, price automatic reaction is a very huge, a rebound all the way up. So secondary test, you take it as there's some kind of zigzag. Secondary test, STB, spring. What happens? The spring breaks the secondary test B, comes back down for test. We do not know how low the test will be going. Next, price goes up, breaking the test, and then that is our entry. So normally a best way that we can enter, a possible way that we can enter, let me just draw it out. We can enter using a Fibonacci line. So let me repeat again, I do not expect you guys to fully understand Wyckoff because it's very technical and it's very complicated. So I'm trying my best right here to explain it to you guys. So with that, area got broken. Let me draw it out. Okay. Okay, the test got broken, last point of supply. You can enter using a Fibonacci line, drawing from the bottom of the test to the top and entering at the 61.8% area. Why the 61.8% area? Because it's a golden Fibonacci line. It's the golden Fibonacci ratio. So you can take a long position, enter right here. Stop loss, if you want to be very safe, you can put it below the spring. But for me personally, I like to put it below the test because I expect that area to be respected. And where do I aim? Where is my first partial? My first partial would be the automatic reaction. I'll name out this area first partial take profit. Just remember this area is the first take profit target, so it's in green, star also in green. Okay, I'll just increase the text size a bit. First partial for take profit. Okay, and then what happens after this area gets broken, after the automatic reaction gets broken? It forms a sign of strength B. So yeah, I forgot to tell you guys there's a SOSB. SOSB is when you know that price can possibly continue going higher. So let me just type it down. Please don't screenshot first. I will just screenshot this and I send it to the chat. SOSB. Okay, just ignore SOSB. Okay, it means sign of strength. Sign of strength for price to continue moving upwards. So sign of strength. All right. So yeah, this is the entire Wyckoff accumulation schematic. Okay, secondary SC. Wait, let me get it out. Okay. I will copy link to the chart image. I'll send it to everyone. Okay, this is the Wyckoff accumulation schematic on the 1 minute chart. Before I move on to distribution, reaccumulation, and redistribution, you guys have any question, feel free to let me know. If you guys understand the schematic so far and how to spot it. So normally when an accumulation happens, normally there's some kind of area to the, let me move to the 15-minute chart. There's some kind of demand area that price has to rest into. So in this specific scenario, we have a 1 hour, a very, very nice 1 hour demand area. Okay, right here, there's a nice 1 hour demand area. You have to wait for prices to hit in a specific area. So take a look, price tap into the, okay, I'll just screenshot you one more time. I'll send it to you guys. This is the 1 hour demand zone. So if you guys use smart money concepts, this is very, very important. So Wyckoff helps a lot with that. Price steps into the demand zone. So using Wyckoff, it's a form of confirmation for your entry. So let me screenshot this down again and I'll send it to the chat. So this is the updated one. Please do not use the first one. Can I delete the first one? No, I can't. So yeah, just use this latest link that I've just sent to the chat. All right. Any questions so far, or is it too complicated for you guys? You guys need me to slow down. You need me to explain. Do let me know. So this is the entire accumulation schematic. Okay, I'll be right back in a minute or so. While I'll go get a drink. My throat is getting dry. So please ask any questions. Please do not, leave any questions unanswered in your head. If you are thinking you guys don't understand, please send it in. Right, I'm back. Okay, give me a moment. My throat is just too dry, man. Okay. Okay, next. Where do we take our final take profit? So as I told you guys here already, is the first partial take profit. Your next take profit area, you can aim for a supply zone. So possibly maybe on the 5-minute chart, there might be a supply zone right here. I'll just label it down. 5 minutes supply zone. So that's the reason why you guys have to use multi-time frame analysis for your trading idea. Take a look at that. Sign of strength, and this is the 5 minutes supply zone. Okay, Jesse Banu Shark asks if we are a swing trader, can we use the same schematic Wyckoff like from 4-hour demand and look for 15-minute Wyckoff? Well, you can also do that because price works in a very, very fractal manner. So how it's very, very complicated because on the 1-hour time frame, let's say that we expect a spring to form on the 1 hour. Let's say this is the 1 hour chart. We have to move on to the 1 minute and then start to look for accumulation here. And when price breaks the 1 hour STB, we start to look for a distribution back on the smaller time frame to form the test. So it's very, very complicated, but for now, just aim for the 1 minute time frame. Just try to practice it out on the 1 minute time frame. So Promise Ike asks, accumulation schematic, is it safe to say it's a reversal strategy? Yes, definitely. It's safe to say so because price is moving in a strong downtrend, So an accumulation schematic is like a confirmation for you to buy in a downtrending market, expecting price to reverse back up. So yeah, I can safely say it's a form of a reversal strategy. So Promise Gritima, she asked whether the entry points be refined to improve the risk to reward. So definitely. So if you this might get a bit, a bit complicated. So there's one more area that I like to use is the 70.5% Fibonacci line. So I like to use imbalance. So if you actually look at the market, if you look at the chart right here, there's a very, very tiny market imbalance right here. So this is called a fair value gap. You can actually enter. So please do not think too much about all these fair value gaps. All this is not part of the Wyckoff schematic, but this is a way that I actually use to refine my entry. So you notice that price tapped very, very nicely into it, into that fair value gap, that market imbalance right there on the 1 minute chart. And that's how I can improve my risk to reward. So it becomes a 1 to 5.36 risk to reward. So yeah, that's how you can improve on it. Okay, Ike, what kind of pairs that you are looking at? Do let me know. For me, it's Ike. Does the zero of the Fibonacci start from the high or the low? It's from the high. So what you do is you draw from the bottom to the top. So I draw from the bottom right here, draw all the way up. That's how I get my area. So that's your answer. Kayla, EME, Kid Shotzi. So Promise Ike, you want to ask other currency pairs? Go. Aussie dollar, US 30. Well, sure, let's go. Let me clear it out. Okay, price actually hit the take profit level on my previous analysis. All right. 30-minute chart. Well, for my personal experience, Wyckoff works better on the 1 minute chart. Because on the 30-minute chart, 1 hour chart, 15-minute chart it's way too long. And any news events can screw up the, it can screw up the entire schematic. So from my personal trading experience, really, Wyckoff works well on 1 minute, but it takes a long time to form. So for example, just now the euro dollar one, it actually took about, it took a good 4 hours, nearly 4 hours to form the schematic. And it's on 1 minute. You can only see Wyckoff quite clearly on the 1 minute chart. Okay, I'll move back to gold. I'll move on to 1 minute chart and find a accumulation schematic. Let me find it. All right, here we have another Wyckoff accumulation schematic. So a problem with Wyckoff accumulation schematic, every single currency pairs look slightly different, but it's more or less the same. So here we have the selling climax. I'll type it out again. Selling climax, automatic reaction. Next, we have the secondary test, the ST, secondary test. And the problem with Go that I traded Go before, secondary test B and Spring, most of the time they are sharing the same candle, sharing the same area on Go. Next, price actually breaks the secondary test. We get a line out, forming a test area. So this area is the test before price continues moving up. So in this specific scenario, it looks very, very different on Go. That's the reason why I say if you enter, you take a long, your stop loss be below the spring just to be safe, just in case price clears out the test area. So next we have the last points of supply. Price goes up, breaks. Next we have the last points of supply. How do we enter? We can possibly enter at the 61.8% Fibonacci area. So again, same thing, moving up. 61.8% area, you try to enter there. Long it right here. Stop loss below the STB and the spring. Your first take profit target, just remember, is here again. First take profit target. And then the SOSB forms, sign of strength. Before price continues, moving upwards towards your. So let's say we have an area. Let me find. There might be some kind of demand area that we are aiming at the very, very top. Okay, there is there 30 minutes? Is there anything? No, there's a 5 minutes. Let me find a demand area. Supply area, I mean. So more or less, we have pretty much quite a nice supply zone right here. A 5 minutes supply zone. 5 minutes supply. All right, let's move back to the 1 minute chart. So that would be your final take profit target. Okay. So it works more as a scalping strategy. Yup, it does. For Go, it's quite fast. So instead of taking 4 hours on euro dollar to form, it more or less takes like an hour to form on Go. So Go is quite fast. Every currency pair, the Wyckoff schematic looks different. So do remember to test it out, back test it out all the time. What works on Go may not work on euro dollar. Okay, let me read the questions first. Okay, so Promise Guitama asked, to be able to see this, do you wait to get to the test to be able to mark up the charts? I'll keep drawing it along the way. So every time the chart moves in the area, I'll start drawing, I'll add all the schematic in, I'll keep drawing until it has to fit this specific scenario. I'll keep drawing until that shape appears. So every time the SC forms, let's say I draw the SC here, I'll just keep moving it until the schematic forms. So that's the reason why I say it might be complicated for new traders. I do not recommend beginner traders to use the Wyckoff schematic for trading. So Jesse asked whether is it right for a varied OB to have a liquidity grab for varied supply and demand. Well, so for order blocks, we will not be covering it today on the Wyckoff teachings. So it's only purely on Wyckoff. If I introduce an order block, it might confuse many people because they do not know what an order block is and how to spot them. It might take some time for them to even see it. So Lawa Rasang asked, do I have a compound course on it? Well, I actually wrote an entire Wyckoff education post. Let me find it. That's the educational post. I'll send it to you guys in the chat. I did write it down. Okay, so we have the Wyckoff accumulation part 1. So you guys feel free to boost the idea and feel free to follow me on TradingView. Okay, So next we have the Wyckoff scheme distribution, part 2. So yeah, that's how I enter a trade. Okay, so I'll screenshot this down and then I'll send it to the chat. This is for Go Wyckoff accumulation schematic. Okay, any questions so far? Any more questions so far regarding the Wyckoff accumulation schematic? Before I move on to distribution schematic, because it will get more confusing moving on from here. Okay. All right. Okay, if there are no further questions, I'll just move on to the Wyckoff distribution schematic. So distribution is when prices are moving downwards. Wait, let me check euro a while. Okay. So I actually enter a trade. I'm still looking at it. Okay. Okay, next, let's move back to what we are talking about. The Wyckoff distribution schematic. So looking at this area, the same thing, prices already moved up. Next, we are looking for, I'll just delete this entire area out first. So we have the Wyckoff accumulation right here has already happened. Let me delete it out and we can continue. So with price tapping into the 5 minutes supply zone, we can safely start to look for a short. We can look for a sell, start to look for a sell. So how do we do that? So Wyckoff distribution schematic. I suggest you guys to go and practice accumulation first before you start to look for distribution. So instead of SC, we have BC. What is BC? It means buying climax. Same thing, we have automatic reaction secondary test, but we do not have a secondary test B. We have a UT. So UT is called the upthrust. So and next we have the UTAP. UTAP is called the upthrust after distribution. Next we have the test and then the last point of supply. And instead of SOS, we have the SOW, sign of weakness. So you see, so far I'm not looking at any PowerPoint slides to teach you guys Wyckoff because I've been using it for already 2 years. I've been using Wyckoff for 2 years. So more or less it's at the back of my mind already. So normally when I trade just now, I show you guys, oh yes, there's the PSY, preliminary supply. PSY. I normally don't draw the PSY because it's not needed. It's really not needed when you are actually trading. So I'll just ignore the PSY. When you draw it out, it just doesn't help in your charting. PSY is beside the BC. I don't think it's needed at all. So with buying climax, how do we draw it out? So BC, AR. Next, we have a ST. ST is in the middle. So you can also ignore ST. I normally do not draw ST at all. I ignore the ST because ST is somewhere in between, is irrelevant. But UT, I'll draw. UT, I'll draw. I'm just saving you guys time. If you draw PSY, I'm not going to explain why it's that because it's basically just beside the BC. So I think it's redundant. That's the reason why I'm ignoring it. So UT, and then we have the upthrust after distribution. So how do we enter? Same thing. Price breaks the UT. Price breaks the UT, and then it retraces about 38%. 38.2%, roughly 38.2%, and then price breaks again. And at this point, you can actually enter a trade. Can either enter at 38.2%, or for me, I like to at least 61.8%, but in this scenario, it did not tap into the 61.8% area. So if you are trying to have a very, very nice entry all the time, aiming for the 61.8% area, most of the time it might not hit and you just miss out on the entire trade. So what I like to do is I either enter at the 50% area, the 50% Fibonacci line. Why 50%? Because anything above right here is the discounted area. Anything below is the premium area. So all of us we like discounts in our life. We like to buy things cheap. So you can take a short position. Stop loss above. Oh yeah, I forgot to mention this area is the test. And we are entering on the last points of supply, LPS. So after price breaks the AR, the AR right here, it forms the, what does it form? It forms the sign of weakness, the SOW. That's when you know that price can potentially continue heading downwards. So at this, when sign of weakness forms, you can actually close part of your trade already. You do not have to hold all the way. And where do we aim for? We can aim for the next demand area. So a larger, maybe a 15 minutes demand area right here. M15 demand zone. So take a look where price hits to before it bounces up. So this is the M15 demand zone. All right. So I'll just screenshot this down and I'll just send it to the chat. Okay, at least 38.2%. So ST, SOW, everything is out there. Okay, I'll just copy link to the chart image. I'll send it to you guys. Copy link to chart image. Wait now. All right, just send it to you guys. Any questions so far, just let me know. So far, any questions regarding the Wyckoff distribution schematic, how price distributes, how you can enter your trade? So this actually takes practice. It takes some time to even spot this entire schematic on a chart. So do not, hopefully wish that you can tomorrow or tonight after this webinar start to spot it on the chart. It took me actually 1 year to see it very easily, take a look at it, and I already know it's accumulation or distribution. All right, let's move on. Okay. Let me find. Okay, any questions so far? Just let me know. All right, so you're asking Jarvis Rodriguez asks whether you can access the video after the webinar. Well, definitely it might be uploaded on the IronFX YouTube channel, IronFX. Let me just send it to the chat again. Give me a moment. Oh my, where is it? Okay, you can actually subscribe to the IronFX YouTube channel right here. Okay. So yeah, how's the distribution? How's the accumulation so far? Rate out of 10. Will you guys use it? Will you guys use the Wyckoff trading strategy in your own trading? Do let me know whether it's a yes or no. If you guys will use it, just say yes. If you guys won't use it, too complicated for you, say no. All right, nice. Kerima Kid Shotzi. She said yes, she will use it. Well, do take some practice. Over the weekends, you can go through the chart slowly, go through on the 1 minute chart. Take your time. Take your time to look at the charts before you enter any trades. Backtest it out, most importantly. So Promise Ike said, yes, he will love to master it and try it out, definitely. Because it gives you a very, very strong confirmation. You notice when your schematic is right, it's very, very fast. Last point of supply, and it just goes on to the downside. Or Dave says, not now. You need to be mastered. Well, definitely. Wow. That's a very, very good thing that you guys that Dave has just said. He doesn't want to use it until he has mastered it. That should be the way everyone should be doing. Master it, try it out on the demo accounts first before you do it. So Jesse asks, you have a question out of the webinar. Do I mentor one-to-one? Well, if you're interested, you can actually follow me on my TradingView account. So at Jesse. You can follow me on my TradingView account. You guys can contact me there if you guys have any more questions outside of this webinar. Just let me know, can follow me, contact me there, message me. So Promise Guitima asks, you have been seeing this on the chart, but wasn't sure how to approach it. Well, definitely, that's the reason why. Wyckoff explains it. Wyckoff schematic actually explains it out. How to enter, how to buy or sell using the entire schematic format. So what is a break of structure? Well, Jarvis, I'll just show it to you. A break of structure looks like this. So you see price moving upward nicely. Next, what happens next? It breaks the staircase formation and starts to go down. So this is what we call this area right here is called the market structure, break of structure. So yeah, that is the break of structure. Just a very, very simple form of it. I'll just screenshot this down and I send it to chat. Break of structure. All right. So Promise Ike also said, oh, Jarvis, I've sent the screenshot already. So Promise Ike also said it's quite simple, just a little wow. Well, it's actually very, very wow. I didn't believe it will work when I first heard about it. So Jarvis asked, can you show on the actual 5-minute charts on Go? No problem, Jesse. I'll show it to you. So okay, just take a quick look right here. Live. So price right now, I'll not talk about redistribution, reaccumulation, because it's way, way more complicated and we do not have time to talk about it in this webinar. So right now, we can potentially look for Go too. So Go right here already tapped into this area. He has did some sort of a small little accumulation back up to the upside. Okay, I don't think I can show you right now. This looks like to me a possible reaccumulation schematic. Price can potentially go back up. So reaccumulation, I will not do it for now. So let me find another. So I already show you guys here. You cannot see on the 5-minute chart because Wyckoff is is more clear on the 1-minute chart. I do not draw Wyckoff on the 5-minute chart. It's very, very hard to find. On the 1 minute, it's clearer. Let me find a specific scenario. Okay, this is actually quite complicated to draw for you because it takes some practice to actually start to say, oh, there's a SC, there's an AR, there's a ST, STB, spring, last point of supply. It's very, very small. It's too small. So I'll find one that is on the larger to show you. The larger time frame. Okay, do we have it here? Do we have it here? Test. Okay, we have it here. So price actually went down to clear out the liquidity hotspot, the equal lows right there. I'll just label it out, line only. So next we have the SC, AR, ST. So just now I told you guys that on Go, sometimes the ST and STB is connected. STB and Spring, they are together. So next we have the test right here and the last points of supply. So why did I draw the last points of supply there? Because if I draw it out, price broke the ST. Oh my god, wait. Let me clear this out. Oh, okay. Got it. Price broke the ST, as we've seen right here. And then price came back down, forming a test. But it did not break the secondary test B. That's why this area is respected. Next, price moves up. It breaks the test area. So the test got broken. Next, come back down. That's why I told you guys you can enter on the 61.8%. 61.8% area. You take a look. Very, very nicely. Price steps in. Take a long stop loss all the way below secondary test B, and you aim for price to the upside. You know, you can actually clear the previous high right here. Your first take profit target can potentially be there. And the rest, you can leave it to run. So most of the time, I like to close it out at the next high, the next swing high right here. That would be my take profit target. So yeah, I'll just screenshot this down again and then I'll just send it to the chat. Okay, so promise I say it looks like head and shoulder or inverted head and shoulder pattern. Well, it looks like it. It looks like it. But Wyckoff schematic, it just gives you the explanation on what is going on in the chart. It gives you a better entry, gives you a better confirmation before you enter any trade. So yeah, by the way, we have come to the end of this webinar already. So yeah, we only managed to cover accumulation and distribution schematic. It's very, very complicated. So please take your time to understand it. Please take your time to learn it before you apply it to the charts. So yeah, any more questions, just let me know before I end this. I'll give you guys 1 more minute. A promise, Ike. No problem, no problem. A promise, Gritima. No problem also. Glad to help. All right. Yeah, I'll give you guys another maybe 10 more seconds to type out your questions if there are any before we end this webinar. All right. Looks like there are no further questions. I'd like to thank you guys for joining me today. So yeah, thank you, Brian Kimani. Thank you, Charles Okokuni. Thank you, Dave. Thank you, Emmanuel Akpan. Thank you, Collins. Thank you, Jarvis Rodriguez. Thank you, Jesse Banushak. Thank you, Lawa Rasak, Muhammad Ayaj Khan, Ugenero, God bless, Paul Ekberge, Promise Guitima, Promise Ike, and Romeric Bao. So yeah, thank you guys for joining me today. I wish you guys a safe trading day ahead. We have the NFP this Friday, so please stay safe trading in the markets. Take care. So yeah, see you guys again soon. Hopefully, likely next week again. No problem, guys. Just take care. Bye-bye. Take care.
Hello, my name is Christina, and today I will talk about GDP. Gross domestic product is the monetary value of all goods and services produced in a nation during a given time period, usually a year. Basically, it's a record of everything bought for money during the course of 1 year. Consumer purchases from a chocolate to a car and counted in the GDP. When businesses buy computers or export goods overseas, the transactions all increase the GDP. Government spending also contributes to the GDP. A related statistic is the GDP growth, which is a percentage that shows how fast the economy is growing. If the annual rate of GDP growth is 3%, that means the economy is 3% larger than it was the previous year. The rate of GDP growth changes depending on the health of the economy. During an economic downturn, the economy contracts and GDP declines. For example, the recession that lasted from 2007 to 2009 was a severe period of economic decline. A GDP figure that shows strong economic growth means that businesses are making money and can hire people. Unemployed people are more likely to find a job and consumer spending rises, leading to more profit for businesses and even more hiring. Government leaders analyze GDP reports when creating economic policy. The US Central Bank, the Federal Reserve, uses the GDP report to gauge economic activity. Investors look for signs of sustainable economic growth in the GDP report, paying close attention to the information it contains, especially corporate profits. Business leaders analyze the economy's performance as is reflected in the GDP report so they can decide on future investment and production. As a measure of the sheer size of the economy, the GDP provides economists and ordinary citizens alike with a convenient and accurate measure of economic vitality or the lack of it. Thank you for watching.